and welcome to Stocks Down Under. My name is Stuart Roberts, and I'm one of the co-founders of our service. And joining me all the way from Brighton in the UK on Friday, the 28th of April, 2023, is Mr. Chris Lewis, who's the Managing Director of Hartshead Resources, ASX HHR. Chris, very early in the morning, your time. Good morning.
Good morning, or I think good evening for you, Stuart. Good to see you.
Yes. So, Chris, I like to joke you're half Australian. You're a POM and originally from Scotland, but you spent a lot of time in Perth back in the days when you were a geophysics consultant. So you know the way we crazy Aussies think, right?
That's right. Yeah, I was in Perth from '95 to 2002, so I had a good 7-year stint there, and got to understand a bit of the Australian psyche, I think.
Right. Over the years, you've had about 5 listed companies in the exploration production phase that you've managed to bootstrap and deliver some reasonable value for shareholders. Before we press the button, you were talking about Centric in the Rift Valley of Kenya, where you took the stock on TSX from 7 cents to 64 cents.
Yeah, absolutely. I'm not going to take all the credit for that. I was part of a team. I was the VP of Exploration. The CEO was a chap called Alec Robinson. We got involved in a small TSX listed company that didn't have a lot going on. We managed to get hold of a really attractive exploration block in the Tertiary Rift in Kenya, just when that was really taking off, when Tullow had all the discoveries in Uganda, and this was sort of a lookalike Tertiary Rift section in Kenya. We got awarded that. We worked it up. We then farmed it out to Tullow Oil and Gas, who I'm sure your listeners have heard of. And then ultimately, we sold the company to Africa Oil. And this all happened within a space of about 14 months. When we got involved and got the blocks, the stock was at 8 cents, I think 7 or 8 cents, and we sold to Africa Oil for around about 64 cents. So it was a really good, quick, and value accretive story. Right. I think the shareholders are very happy with it.
I got you to share that story because we've got something potentially that can beat Centric in Hartshead Resources. You closed this afternoon on ASX at 3.3 cents a share. You've just taken a suite of gas fields in the Southern Gas Basin in the UK, and you've brought in a partner on that transaction where the enterprise value for the outsourcing is effectively 22 cents a share. So we've got a 7 or 8 bagger on that transaction if the investors pick up and take notice. Talk to us first of all about the Southern Gas Basin, then we'll talk about this recent seriously value-creating transaction you've just done.
Yeah, sure. So the Southern Gas Basin, it's a really well-known gas basin in the UK North Sea. It's in the southern section of the North Sea. The gas production started in the late 60s. So there's been gas production in the Southern Gas Basin for several decades now. Multiple TCFs of gas have been produced from the same reservoirs we're going to be producing from our gas fields. Super majors have been in there. BP used to be in there. ConocoPhillips used to be in there. Some super majors are still in there. So Shell and Exxon still have production operations in the Southern Gas Basin. Lots of infrastructure, really well-known subsurface and surface. So a really mature basin where a nimble small company like Hartshead can get in, pick up really valuable acreage for us that's got modest discovered gas fields where we can come in and look at development concepts where we leverage the infrastructure that's nearby, that's owned by other people, which means we keep our capital costs down and we can create real value out of discovered molecules that we know are there. So yeah, it's a really good place for a little company to go in and start developing valuable gas resources. Right.
4 fields in that basin. And you and I met about September, October 22 in Perth. And you talked about looking for a development partner for those assets at that time. Now, those discussions, I understand, have been ongoing since about June 2022. Here it is, April 2023. You just bagged the elephant. RockRose is coming in. Now, people who know the UK oil and gas scene will know RockRose was a listed company until 2020 when it was acquired by a significant private Italian company. That company is now doubling down on building out its North Sea acreage. Complements the fields that they're taking 60% off from you.
That's right. That's right. I mean, there's a clear growth strategy from the ultimate parent of RockRose, a company called VRO. We've seen in the last 3 or 4 years them complete a number of transactions. So initially they bought RockRose and RockRose listed. They took RockRose private, and since then they bought the production portfolio from Scottish and Southern Electric.
That transaction was a steal, by the way. It was done in July 2020 when some of us, not you or I, thought the world was coming to an end when it came to oil and gas, right?
Yeah, absolutely. I mean, hats off to Piaro. I think they're seeing where the value is, and they're coming in and picking up assets from people who clearly don't want them anymore, and they're doing some really good deals. Right. I mean, the SS&E deal was another steal. They bought that when I think they put their offer in when gas prices were on the floor, and they completed it when gas prices were £2 or £3 a therm. I think the deal probably paid for itself within 12 months. Right. So they're very savvy in terms of targeting the right assets and coming in and building their oil and gas portfolio in the UK.
On the other hand, they are actually paying a decent amount of money to get involved in your Southern Gas Basin assets. We're talking 196 million for the phase 1 development of these fields. Talk to us about how that'll play itself out.
Yeah, absolutely.
That's 196 million of ours. I think 128 million US is the figure you've quoted.
Yeah. RockRose are coming in and effectively acquiring 60% of the license, and fundamentally the value is driven by our phase 1 development, which is 300 BCF of gas. And they are effectively paying that 196 million Aussie for the 60%. It's broken up into chunks. When we complete the deal, we get a payment of about 12 million. And then when we take FID, we get a carry. So RockRose deploy their capital on our behalf for the first $96 million of capital requirement for our phase 1 development. We also get a cash payment from them of around about 46 million Australian dollars. And all of that is effectively the consideration they're paying us, but it's getting deployed towards the capital to get our phase 1 development done. And then there's a split of the super deduction on the energy profits levy. We structured the deal to make sure we shared the benefit of that with RockRose. And when you put all of those different elements of the deal together, that's where you get to the $196 million of consideration for the 60%.
Yeah. Now, the super profits levy that you're talking about is interesting. Everyone's concerned that the UK government just wants to slug little companies like you because oil and gas prices jumped heavily after the shooting started in Ukraine in February of last year. The upside of that is the government's realized they actually want more domestic production. So they're offering huge tax deductions for all the capex involved in new projects, and you get to benefit from that now that you've got the partner who is going to contribute to that capex.
Exactly that. The super deduction is 91.6 cents in the dollar. So if you're producing in the UK and you're a taxpayer paying the energy profits levy, and you deploy your capital into new oil and gas developments, let's say you've got 100 million of capex requirement. When you factor in the super deduction, that only costs you $8.6 million. So it's a real incentive for people to redeploy their capital in new oil and gas developments rather than take those profits out of the UK or do something else with them. It's a real driver to get investment in domestic oil and gas.
Right.
And it's obviously benefited us enormously bringing RockRose into the transaction.
Absolutely. You've got RockRose contributing. You get to benefit. You've managed to structure it so that you get the maximum upside from this levy, from this incentive that the government's handling. When you factor in the size of the asset, 300 BCF potentially, basically, and you've put this into your presentations, this transaction is worth 22 cents a share. And yet that's 3.3 cents this afternoon. So that's potentially your 7 or 8 bagger from here.
That's absolutely right. And look, the 300 BCF is 2p independently audited. Right. So that's our independent reserves auditor. The valuation of 380 million Australian dollars for our retained 40%. That's independently audited. That's from our reserves auditor.
Yeah, and look, I'm optimistic.
All of that value there is independently derived, and all the other value that goes to that 22 cents a share is direct read through from the consideration RockRose are paying. So that 22 cents a share is numbers that aren't coming from us; they're coming from the transaction and our auditor. And you wrap all that together, and you get 22 cents a share. So I'm really optimistic as well. I think there's a long way to go for this story in our share price.
Yep. One of your Hartshead director colleagues, Nathan Lude's been buying heavily. Basically since this transaction went public. And as I like to say, this is 2p. We could get 3p in terms once we figure out what's down there.
Oh, absolutely, absolutely. And let's not forget we've got phase 2 and phase 3.
Right.
Phase 2, it's another 140 BCF to be developed. And then we've got phase 3, which is 344 BCF of exploration. And these exploration prospects in the success case get tied into our phase 1 infrastructure and monetized really quickly. And you bring all that together and it's about 800 BCF, nearly 800 BCF of gas in the license. So yeah, a really significant resource volume there.
Right. So and 2023 is the years when it comes together. You're flagging that you'll get your front end engineering design done probably around the middle of the year. Third quarter, potentially your project financing to bring all the magic together. So you'd be confident enough to commit to that. Obviously, anything can happen, but that's what you feel you can achieve. So pretty much from that point, we're away building phase 1 of this project for the first 2 fields, and beginning to unlock some of that 22 cents a share.
That's absolutely it. I mean, we're nearly through front end engineering design. We're anticipating submitting our field development plan to the NSTA. Hopefully next month.
NSTA being the regulator for UK
oil and gas regulator.
Right.
And so that's that piece done, pretty much. And yeah, putting the debt package in place is very important. That's what I'm really focused on at the moment and working very hard on. Very confident we can get that over the line by third quarter. Very confident that once we do that, we can take a final investment decision on the development in the third quarter. And then, as you say, we're into the realms of cutting steel and laying pipe, so it starts to get really interesting. But I said we would get a farm out done by the end of the first quarter this year, and that's exactly what we got done. I said we'd submit our concept select last year. We did. I said we'd get 2p from a reserves auditor last year. We did that. I've pretty much hit every milestone I've said we're going to hit so far. And I'm pretty confident we can hit the next ones as well.
All right. Well, Chris Lewis, well done to you and your team as to all that you've achieved. It's a great opportunity, and in particular, the timing is perfect. We were talking a moment ago about domestic UK gas prices, and it's a little bit tricky how you convert that from the way gas is priced in the UK compared to other markets. But it's the equivalent of something like 18 or 19 Australian dollars per gigajoule. I'll take that pricing any day of the week if I'm a gas producer.
Stuart, so will I. Absolutely. No, it's a great market. We were talking about what underpins that, and the fact that the marginal molecule is LNG, and that puts a pretty significant floor on the gas prices in Europe and the UK. So I think we'll be selling into a really strong gas market when we get into production. All right.
Well, Chris Lewis, keep up the good work, and good luck in terms of reaching those milestones on project debt financing. Thanks for talking to Stocks Down Under.
Great stuff. Thank you very much for the opportunity, Stuart. Cheers.